All right, everybody. So what I'm going to do here today is I'm going to introduce you to a brand new strategy. It's called the ATR, the Average True Range. So what we're going to do is we're going to start it from scratch. We're going to introduce this strategy today, and then we're going to build on it from there. Very low maintenance, very easy strategy, and if done right, can be extremely profitable. But it's called the ATR, okay? It's ATR strategy, which stands for the Average True Range, okay? The ATR strategy, and we're going to look at both call options, and you can also do it with put options, okay? So the first thing we need to do is we need to understand what is the ATR. Well, the ATR is called the Average True Range, and the Average True Range shows you what on a daily basis this stock normally moves, okay? So if the ATR says 1.40, that means that that stock that you're looking at moves on average $1.40 a day, okay? So let's just start our chart from scratch. So this is how your chart, we're going to just start it from very, very scratch. Okay, so just take your chart out here, and we're going to just go to a daily chart, and let's just do 1 year daily, just to kind of get it rolling, okay? 1 year daily. Then what we're going to do, all the rage, that's funny. You're going to go up here to your studies, and we are going to get rid of this RSI, and we're going to get rid of this MACD, and as a matter of fact, we're going to get rid of everything. We want a clean chart for a minute. So this is how your chart is going to look in the beginning with no indicators, no nothing. Now, let me go over to my real money platform really quickly, because on my real money platform, I have this all set up because I trade this on my real money. So what we're going to do is we're going to add 2 moving averages, okay? 2. You're going to go up here to Studies, Edit Studies, and you're going to go to Simple Moving Average. Double click. Double click. 2. We're going to add 2 of them, okay? Simple as that. Simple moving average. The first one that we're going to do, we're going to edit it, and you're going to make it the 20 simple moving average, and it's going to be blue. I like to do blue. So the 20 simple. You can do this on any of your platforms, okay, guys? Any of your broker platforms you can do this on. 20. I'm making mine blue. The next one we're going to do 40. 40, and I'm going to make mine red. So the 20, 40, and I'm going to make it red. Okay? 20, 40, red. Boom. Okay? So these are the only 2 moving averages on your chart. Now, hopefully Toss has it. We're going to go ATR. ATR, click. ATR. And what that is, again, is the average true range. And you want to leave the default at 14 days. Leave the default at 14 days. What this is showing you is the average of the last 14 days. Okay? This is the only indicators that go on your chart. Apply. That's how it looks. Okay? And then what you want to do is you want to go to Studies, Save Study Set, and let's just call it the ATR strategy. ATR strategy. ATR strategy. Okay? Save. So then anytime you want to see it, you go back up here to Setup, and you can go, it's here in your study sets. Mine now says, where's it at? Hang on. Here, I know I just saved it, ATR. Oh, let me save it again. Oh, I know what I did. What I did was I saved the study set. So if you go here to Load, it says ATR. So you can save the study set, but you can also save your workspace. If you go up here to Setup, Save Workspace, and I'm going to save Workspace as ATR. ATR. Save. So now we're good. So up here in Setup, it's got my ATR. It's got all my study sets. Okay, so that's the first thing. So we're going to do that. So you're going to add 2 moving averages, and you're going to add the 20 and the 40. Simple moving averages, okay? Boom. You're also going to add the ATR. So you're also going to add the ATR and leave it the default 14 days. Okay, beautiful. So that's the only thing. So now the whole game plan, well, let me just do this real quick. We talked about this, and I'm going to do this over here in another one. Now, we've talked about in the past this market forecast, and I can do a separate video on it as well. Okay, but this is the only thing we're going to do with this. If you guys remember the market forecast tool, and I have tons of videos on it, but I can do a specific video on it again. What we're focused on is this green line, and the green line, and we only do this on the SPY. Here's the reason, guys. Look what happened to the SPY today. I tell you about this all the time. The stock market bounced, and it gapped up. That's what it did. Every one of those stocks I showed you pretty much did what? They gapped up. Remember, I don't care how good a stock picker you are. If the market is going up, you are probably going to win if you're bullish. If the market's going down and you're trading down, you're going to win. Look at that. Look at that. So what we want to do is we want to put the odds exactly in our favor. That's all we're doing with this is we want to be in line with the market. So if I go up here to studies, and again, I'll do a separate video, edit, I just want to go in here and I want to erase this blue line. Okay? Now, I have videos in the past. So we're going to have this green line and this red line. The green line represents the near-term momentum. Now, I've talked about this in many, many videos, and I will do another one on it. But when the green line is in this zone up here, you're bullish. When it's going up, you're bullish. When it's going down, it is. When it's going down, look what happens to the market. It's going down. When this is going down, it's going down. When it's going up, it's going up. Okay? This represents the intermediate term trend. Now, this red line represents the short-term momentum. We love to buy when the trend is up and it pulls back. That means the momentum is up and then the short-term momentum is pulling back and we want to catch that bounce, right? Momentum is up, pulling back, bam, it bounces. This is our money. We don't want it to gap. We want it to open up low and then the momentum go up. But look here. The momentum was up. This red line entered into the bottom zone. Okay? The red line is the short-term momentum. So somebody tell me, when the short-term momentum gets down in here, it bounces. Usually comes down, bounces, comes down, bounces, comes down, bounces. What did it do? It was down. What did it do? It bounced. So what we're going to be looking for in the stock market is when this green line is bullish and this near-term line pulls back here. That is showing us that the market has pulled back, but it could be in for a bounce to the upside. Right? Okay. So that is our filter first. SPY, do we have a signal on the SPY? If we do not have a bullish signal, then we don't look for bullish ATR trades. Okay? I will do separate videos. But that's as simple as it gets. I have a long discussion videos already on this indicator, but I wanted y'all to understand that. Okay? So then let's say we look at this chart and we're like, oh, this is great. We've got our signal, check. Let's go look for trades. So we have our study set. Now, the blue line is the 20, the red line is the 40. So here's what we want to see. What we're looking for is the blue line to be going up and the red line to be going up. The blue line is the 20 moving average and the red line is the 40. What this is telling us, guys, is that the trend is very strong. We are going to do options, but let's figure out a strategy because we're going to trade options on the strategy. So right now, the 20 is above the 40. That is the first visualization that you're looking for. Okay? And then price, you want to see price. Remember, what is the definition of an uptrend? Higher high, pull back to higher low. Higher high, pull back to higher low. Higher high, pull back. That's the definition of an uptrend. So what you want to see is higher high, pull back to a higher low. Higher high, you want to see it above, price above the 20. So the 20 has to be going up, the 40 has to be going up if you're bullish, and price needs to be above the 20, making higher highs and higher lows. So, you guys know the entry into this, and this is really a bull flag. Higher 2 to 5 day rally, pull back, boom. So our entry, you'll see in a minute, I'll show you, but normally we get into a trade when it bounces with our stop loss below support, right? That's what we normally do because we get in at the bounce and we ride it up. So what you're going to be doing here is, let me now go to paint. So we have price. Let's make price green. So price is going up, going up, going up, pull back, okay? We're looking for at least a 2-day pullback, okay? So 2 to 4 day pullback. I'm going to write the rules exactly, but I wasn't prepared really to do this, but I wanted somebody to email me, so I wanted to share because this is a very repeatable, easy strategy. Blue line's going up, red line's going up. Everybody good so far. Perfect. Higher high, 2 to 4 day pullback above this blue line. Represents strong trend, right? Now, the ATR, here's the next big thing. The ATR is the average true range. The ATR needs to be 80 cents or higher. 80 cents or higher. Because we don't want to trade stocks that don't move. We need them to move. Okay? 80 cents or higher. And this is our picture. So let's just go to the chart. And let's see, for example, let me go to my, I have my other pulled up. Let's go. Okay. Perfect example. Wow. Shopify. Does everybody know what Shopify is, right? Look at this. Isn't this beautiful? Okay. So this is Shopify. The blue line is above, clearly. The blue line is above the red. We can see this, right? Beautiful uptrend. This is a trend following strategy. Trading with the trend. Okay? Look at price. Higher high, pull back. Again, this is kind of a congestion, but high, pull back, pull back, pull back. Okay? It's doing what we want. So what we're going to do is we're looking for the first step in the process is a higher high. That's step number 1 in the stock. And again, I will clean this up and make it really good. I just wasn't prepared to talk about it. So step number 1 is we're looking for a higher high with the stock. Okay. Number 2 is a 2 to 5 day pullback. Okay, 2 to 5 day pullback. So it means it's going up, pulls back, right? 2 to 5 day pullback. ATR must be above 80 cents. So let me pick an example right there. Okay, perfect example. Okay, so stock went up, pullback. And guys, one easy way to see the pullback, like we always talk about, is look at these highs. If the highs are getting lower, it's pulling back. It's pulling back. See, it's only 1 day. But 2 days. So this is where I'm looking at right now. So I see this and I say, okay, it's a high. It's pulling back. Day number 1, I see it pull back. And I'm like, okay, this is great. So now I'm looking for day number 2. So the first thing is I look down here at my ATR, right? What does that say? 6.18. It has to be above 80 cents. So we're good. This stock moves. It's above the blue line. These are going up. So then, and again, I'm just going to give you kind of a taste of what we do. So this is what it would look like. Let me back out a little bit. Kind of right here. Sorry. Right there. So what we're going to do when we see this setup, higher high, pulls back, these lines are going up, ATR is good, this is how we're going to enter this trade. And again, I'm going to clean it up. But you would right here, let's just say this was your notes. You would go Shopify, and you would go ATR trade. So you're telling yourself you're trading an ATR. So what is the entry? I'm just going to tell you what the entry is. I'm going to give you guys a scoop. An entry is 20 cents above, right? 20 cents above the high of the low day or any inside/following day. Now that might sound crazy for some of you, but we have so many videos on it. But I'll do more. It's a 20 cents above the high of the low day. 20 cents above the high of the low day or any inside/following day. It pays to read my book because I talk about these inside days and following days in my book. So you need to know what that means. That is my entry. So first you're going to go to ATR, you're going to go to Shopify, and I want you to write down what that ATR is. So it's 6.18. So this is what your notes are going to look like. You're going to put your symbol, you're going to put the ATR. Now, you don't need to keep putting the entry. I just put it for y'all. But what you want to do is you want to put the entry price. The entry price is 20 cents above the high of the low day or any inside following day. This is the low day. This low is lower than this. So you would come to this day and you would look at the high. And all you got to do is look here. So you look at the high. The high is 180.36. So it's 180.36. That was the high of that day. Your filter is 20 cents. Why do we do 20 cents? Remember what I just told you. I want the momentum to be catching up. Perfect example. If you would have done this entry, it opened up lower and then it rocket shipped. That's what we're looking for. We want to catch the momentum. 20 cents above the high of the low day. So 180.36 plus 20 cents. Your entry would have been 180.56. That would have been your entry price. And again, you're going to resort to the rules that I gave you this morning. You're going to go and say, okay, the stock has to go. You would say, what's the close? So again, just like I did today, you would find out what the close is. Whatever price the close was, you would check out your entry, you would get that number, and then you would do the theoretical pricing model just like I did earlier. Just like I did to see what the option will be if it goes to your, and then the rule. So I'm so glad we had that discussion, because this is gonna apply the same way. If it opens up above your price, you're gonna do exactly what we just did 30 minutes before. Okay? But here you go. You get your entry. So my entry is 180.56. So I would have got triggered into this trade about right here. And boy, would I have made a lot of money. So what is our stop loss? Again, I'm just introducing you. Stop loss is 1 ATR. 1 ATR. The ATR is $6.18. So if I'm getting in at 180.56 minus $6.18, my stop loss is 174.38. That's my stop loss. What is my target? Our target is 2 times the ATR. 2 times the ATR. That's our initial target. So our target is 2 times the ATR. So if I'm getting in at 180.56 plus 618 plus 618, it's 192.92. That is my target. So if I was looking at this, you have to do these trades at night. You don't do these trades during the day. You wait for the market to close. You don't place these trades during the day. These are after-hours setups that you set it and you forget it. You can go to work. You can go enjoy your life. You can go look at Forex charts. Okay? So the only thing that we did not do is you would have had to calculate and see what the option was going to be. So let's just make something up. Let's say this day right here, well, this day closed. So what I'm going to do is I'm going to look at this day, and I'm going to look at the close. That closed at 178.47. So what you would do is you would put closed at 148.77. I think that's what it was. Close 178.47. That was way off. 178.47. 178.40. Okay, so this is what you're going to do. You'd put Shopify, ATR, stock close. So then you would say, okay, if my entry is 180.36, what's the difference between 180 and then the 78? Because remember, the stock has to go up. So you would say 180.36 minus the 178.47. That means that Shopify has to go up $1.89. $1.89. That's what it has to go up to trigger us. So going back to the order, you would have said Shopify. Now, you are going to buy. This is too expensive for you unless you guys are willing to can trade it. The first strike out of the money. The first strike that's unshaded, always. Whatever it is unshaded, that's the strike that you're going to buy. First strike out of the money. So that would have been this one. And you would have, now, from then, remember, this gives you the price. I'm not saying you would have traded Shopify. Then you need to do what we did earlier. You need to go to your theoretical pricing model, and you need to say that if Shopify goes up $1.89, what is it going to be? In this case, it would be 13. Now, the market would be closed, so this would not be moving. This would be what we did in the beginning. You would put that number. That's your limit price with the condition, just like we did this morning, at or above 180.56, and you would check it pre-market. Okay, I'm just introducing you guys. So here is it. That's your order entry. So you would have, and we're not going to do it, let's just say it's 1320. You would have right-clicked, buy custom, OCO bracket, and let's say that said 1320. 1320, that would have been a limit order. Now you want to do these market, good till cancel. So all I did was We have many videos on this. Limit order, market, market. Okay? Then you're going to use these wheels. Hit the wheel, and that's where you'll do your condition. Shopify at or above, just like we did all 30 minutes before. Entry, 180, 56. With your timestamp for 2 minutes, just like we did this morning. Because we want to make sure that we don't get gypped in the morning. We want to give ourselves 2 minutes so we've got time to look at it really quickly in the morning and make sure the market maker's not going to throw something at us. If you're not able to look at it in the morning, it's still okay. Because by you putting a limit order, you're telling the market maker that you're only willing to pay this. The only downfall about not being able to look at it is if the stock comes back down, it's going to trigger your limit order. Okay? If you're able to look at it, you can cancel that order or you can, adjust it. But again, it doesn't matter. I traded this strategy for 10 years with a full-time job. And I'd said this. So here's the deal. You're in the trade, boom, boom, boom. Basically, what you're saying is you're not going to get in this trade unless Shopify bounces. You would have got into this trade and you would have rocked because your target, all your numbers are right there. Now, it's very easy. I want to show you guys. This is what's so easy about trade management. Trade management is so easy. What about the cancel checkbox? Now, what I was saying is if you're not able to look at it in the morning, then you just set that trade up at night and you leave it alone. But if you're able to look at it, you can do what we did earlier. If it gaps above your entry, you can change it for 1 day and see if it goes back down and then retarget your order. So if you're not able to look at it in the morning, you just place your order at night, wake up, go to work, do your thing. Okay? Wake up, go to work, do your thing. But I want to get into this trade adjustment. What is the trade management? Very, very simple. Every single day, when you come home, you look at the chart. If this high is higher than this high, you raise your stop to 20 cents below the below the low, I'm sorry. So every single day, all you're doing is looking at your trade. If the low is higher than the low, you move your stop up. The next day, you move your stop up. This day, it was lower, so you would not have moved your stop down. You would have left it, and you may have got stopped out. So your management is simple. Every day, you're going to look at your chart. If the low's higher, you're going to move the stop to 20 cents below the low, the new low. That is it. Until you either get stopped out or it hits your target. Every day, you're going to be moving your stop up. Because here's the deal. Somebody tell me, whenever when these two lines are going up like this, do you see the momentum? Stocks, they usually go up. This trade is a pure momentum play. You're catching the momentum. You're trying to catch these 2 to 5 days. Bam. 2 to 5. Look at this. Look at this home run. 2 to 5 days. Bam. Look at this. Pull back. Enter. Bam. That's why we need the market. That's why we need the market to be in a position. Look at this. It just won't stop. It needs to be in a position that shows that it's going to bounce. And then when we take these ATR trades, our chances of getting in and hitting this move is big time. We're setting it at 2 to 1. Boom. And one of the things I really like about this strategy is it has really small losses. And the reason why is, look at this. If you get into this trade, your stop loss is here. The first day you move your stop loss up, you take off that risk so fast. This strategy allows you to take your risk, like you're getting rid of your risk really fast. If the momentum goes up, your trade will be break even quick. Okay, it's the ATR momentum trade. I, as well as one of my mentors, has traded this strategy forever. And I'm going to be very honest with you. This is the only strategy he trades. He trades bullish ATR trades to the upside on bull flags that are following this, and he trades bearish puts to the downside. That's it. Somebody said UNH. Okay? UNH. This is not the picture we are looking for. I think somebody said UNH. No. This is not it. We want this line. This is very clear. This has to be going up like perfectly. Like it's sideways. This has to be going up to the upside, and this has to be going down to the downside. Very clear. Yes, this is going down, but look at this. This is sideways, not what we're looking for. We need this trend to be doing, see the difference? That. Now, we wouldn't have taken all these trades because we wanted to stay above the blue, but this is what you want to see. You can do anything that you want, Eddie, but the rules of this strategy are the first strike out of the money. But the answer is, yeah. If you want to do a 30 delta like we normally do, that's okay. Okay, so you can go out here and do just like we did. Because again, whatever option strike that you choose, that's up to you. But the rules as far as entry, stop loss target, those are set in stone. But if you want to go out here to that 30 delta, like we normally do, absolutely. And also, choose an expiration. In this case, you want to choose an expiration around 20 days. So, because again, it still might last 3 or 4 or 5 days. So you want to choose around 20 days. I'm going to show you all the rules specifically because I'm going to rewrite them. But around 20 days, right? So it's cheaper. Okay, now this is a very expensive because the stock's $205. So maybe a 30 delta, 20 days, absolutely. It's just through the back testing, and the back testing was this first strike out of the money has always produced the biggest results. So I encourage you to go around the 20 days and stick to the first strike out of the money. That's what I'm going to be doing. AMT. This strategy, look at this. Oh my God. Who put that? Rafa? Oh my God. Now, this, you wouldn't have been able to get into. It didn't even pull back. It just happens. Because again, this is what we're looking for. Higher high, pull back, boom. But this is what you're looking. See the difference, Rafa, between this and this? That's not what we're looking for. We need clean. Look at this. Look at this. Guys, when these trend, they go. Pull back, bam. Pull back, sideways, bam. Because again, your stop is still 1 ATR below the low. And you keep moving it up. Look at that. Pull back, boom. Okay? So, that is the ATR trade. And I'll do separate videos on it because it is it's such a great strategy. It really is. And it works. Look at this. I mean, when these things go up, guys, look at that. But it also works the same for going down. When they start to trend down, look at this. I mean, look at this up move. I don't know any downtrending stocks right now, but let's just go to the actual stock market. Look at this. When the stock market trends up, when the stock market is doing this, I can promise you that a monkey could have bought stocks and made money. So what we're going to do is we're going to wait for when the market's trending, looking beautiful, and then we're going to look for those beautiful stocks. And if it's not beautiful, you're just going to pass and you're going to say, I don't care. If you stick to the stocks that look like this, and you catch these little pullbacks and you do this ATR trade, you guys will make an extreme amount of money. And then, when the market switches, well, it hasn't switched because it's been bull, and starts to go down, Again, you're not going to be trading. You can trade the SPY, but remember, you're waiting for a specific thing. So what I'll start, again, I'm going to do videos on this strategy. I wasn't really going to talk to you guys about it, but I just wanted to let you guys know. This strategy, it's very easy to follow. Look at all these stocks that are up today. Holy crap. Watch. Let's just go through. See what you're looking for. Watch this. Really quick, and then I got to run. 6 months. So is it what we're looking for? COP, is it what we're looking for? No. 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 Up. Boom. Trending up. It's below, but it's trending up. So we wanted to get back above it and bounce. Close. Nope. 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 They're going up. Now, we wouldn't trade it because it's not above it. If it pulls above it and pulls back into a bull flag, yes. Nope. Nope. Yes. Trending up. See the difference? You put these in your watch list, and then you wait. You wait for it to go a higher high, pull back, boom. So I'll start going through our stocks, and I will tell you ATR bullish trades, ATR bearish trades, setups, nothing. Nothing. Going up, perfect, pull back. Sorry. If you practice this strategy, your life will be so easy. If you practice this ATR strategy, again, because I get emails. People are confused, or it's not that they're confused, it's just they're like, what do we do? This is what you do. Now, higher high, almost, pull back, ATR. Look down here at the bottom, your ATR. All you got to do is put your cursor over the stock and then look at the ATR down here at the bottom. The ATR is 141. Perfect. It's got to be above 80 cents. So when you do your bullish and bearish watch list, that's it. This should be in your bullish watch list. Look at this. Perfect example. Higher high, pulling back. You would have got into this trade today on an ATR trade, and you'd be up probably 10, 20%. This is it. 2 to 5 day pullback, right at this moving average, bam. You would be making a lot of money. Target. There it is. Guys, this is how easy it is. What am I waiting for now? Target. I'm waiting for a high, pull back, rocket ship. Right here. ATR, money. And why is this working? Because the stock market is bouncing. A monkey can pick stocks when the stock market bounces. The market pulled back. Just like this is pulling back. This is why we wait until the market is giving us what we need. 2 to 5 day pullback, bam, ATR, money. No, because it's how it's flattened out. We want it clean. No, no, no. Yes, they're both pointing up. They're both pointing up. So I don't know if I was very clear on that, but both have these are pointing up. Okay? I don't know if I actually said it that clean before, but both of them are pointed up. The blue and the red, if this is pointing down, no, like this. They're both going down. So, I mean, this is starting to down. That's up. Like this, look. Perfect example. This is a no-no. Why? Because it's already pointing down. It's flattened out. It's got to be going up. Now, if you're interested in my Options Elite Masterclass or any of the indicators or software that I use to trade the options market every day, make sure you check down below in the description for all the bonuses I'm offering this month. And if you want to get better at trading the TTM squeeze indicator,